How much money do I need to trade full time? How much money do I need in order to make a living from trading stocks or Forex? This is a message that came up in my live room this morning, and instead of giving you some kind of theory or kind of general basis, I want to give you some hard facts that you can take away from this video to give you a real solid and tangible number so that you know how much money you need to trade full time. So let's get stuck in. Okay, so as I said, there are going to be small tweaks that you might be able to make to optimize this, but the fundamentals that I'm going to share with you here are absolutely standard for everyone, and you can take the information in this video and you can apply it to your personal situation to work out exactly how much you need, how long it's going to take you, and what ballpark figure you're going to need in your trading account to live comfortably from the returns, based on your returns. So before I get stuck into your personal situation, I want to talk a little bit about your motivation. Now, if your motivation is just to manage your wealth, manage your money, then the bank is going to give you 0.5% per year, 1% if you're lucky. So any money you have, if you can master the art of trading and use your skills in trading to generate more than a 1% return, and you enjoy doing it and you don't mind doing it and it doesn't take up too much of your time, then that's fantastic. Why not? Why wouldn't you do that? Because anything is better than 0.5% or 1% growth or returns on your money, on your capital. So if you're a trader and you can do 10%, 20%, 30% per year, then absolutely that's a no-brainer if you're willing to put in the work to get those returns on that money. So that's a great reason why you might trade instead of putting your money elsewhere. Another motivation might be to partially replace your income or lower your hours in your job and replace it with trading income. And another motivation might be to just live full time from your trading income. So let's get stuck into your personal situation and your numbers and your requirements and what you need. But before we do that, I just want to say again that I always recommend trading live for a minimum of 12 months before you consider taking returns from your trading account. And the reason for that is for thinking in terms of averages across a long period of time, because that's really going to matter when it comes to you considering taking an income. For example, look at this chart here. Let's just say up the left-hand side, we've got the growth in terms of percent. And down here, we've got the starting balance. That's going to be a nominal amount. Everyone's amount's going to be different, and yours is going to be different from someone else watching this video. So let's just say starting balance. And over a 12-month period, you're going to have a profit, right? Now, let's just say that in this instance, you've got a 25% profit. And as I said, this is over 12 months. So we've got January, February, March, April, May, June, July, August, September, October, November, December. And at December, you generate a 25% return on your trading account. That's fantastic. So we know everything up here is profit, and I'm going to assume that we've taken out of this broker fees, spreads, and platform costs and software costs and broadband or whatever you've put towards your trading business. I'm just considering this as pure profit, 25% profit. Fantastic. So we had a starting balance. Now we've got 25% profit of whatever that was. Now, why do I say 12 months? Well, in actual fact, the equity curve doesn't look like this, does it? It looks more like this. And sometimes you'll have a sideways move, and then you'll have a new equity high, and sometimes it will look like this, and then you go sideways for a bit, and then you might have a good month, and it will look more like that. That is a much more realistic looking equity curve. We don't just go straight up. We have losing periods. We have losing trades and drawdowns, and in fact, there could be a period of 1, 6 weeks, 3 weeks, 4 weeks where you don't generate a profit. So if you're trying to live off of income that month and you've spent your income from last month and you're taking income that month and the next month where you're not generating a profit, that's going to eat into your capital and fuel the drawdown even more. It's going to have the compounding effect in the opposite direction. So that should reinforce why it's important to have a 12-month sample size so you can see what the entire year looks like and what your realistic returns look like after a 12-month period. Now, once we get to the 12-month period, here's where it's really easy. Whatever the percentage is in profit, in this case 25%, let's just say that that's a $10,000 profit, okay? So we're going to put $10,000 $10,000. So after 12 months, you've generated a 25% return, and that equates to $10,000 of profit. What you now have is a figure to work with for the next 12 months without jeopardizing your trading capital, without jeopardizing your liquidity in your account. You can continue to grow this account knowing this figure and take an income. So you're going to take the $10,000. Now you don't want to take all of that as income because you want to keep compounding the account and growing the account. And with any business, you're going to have to pay tax, and it doesn't make sense to take more than 50% profit out of the business if you're running a business well. So for this example, I'm just going to say 50%. So we take 50%, which leaves us 5,000. And then what you can do is divide that across the months, which means that you're going to have 416 pounds per month to play with. With some degree of certainty, you're going to be able to take £400 per month or $400 per month without eating into your capital and compounding your account at the same time. So 25%, 10,000, we take half of that, which is 5,000. We divide that across 12, which gives us $400 or $416. And that means that over the next 12 months, we can realistically take $416 income without eating into our capital and continuing to compound our account. Now, here's where you get clear about your motivation and you start asking yourself, well, what do I need? What is it I'm going for? How much do I need to generate in order for my motivation, for my objective? Partially replace it? Do I need to cover my weekend work so I don't need to do that anymore? Do I need to replace my entire income? How much is that? So let's just say that you need 40,000 per year. Okay, to live on. And that's your annual expenses, which I'm assuming you've worked out, or your monthly expenses. You can work out your monthly expenses. Your monthly expenses might be 4,000, let's just say. Now, in order for you to take out 50% of a profit at 40,000 so that you can pay yourself 4K every single month, that means that you're going to need a return on investment in terms of capital of 80,000. Okay, now we have that number. The rest is really easy because we can take the 80,000 and we can do 80,000 divided by your percentage ROI, which is 25%. So divide that by 0.25, and that's going to leave you with a figure of 320,000. So with $320,000, you are going to generate a profit of 80,000. You can halve that to be conservative, divide the 40 across the 12 months, and you can happily take 4,000 a month without eating into your capital with some degree of certainty. Now, the next question is, what happens if you don't have that? Well, here's the thing. Another great thing about going 12 months before you start taking an income is you get a ton of belief in your system. When you believe that you can trade and consistently generate 25% per year or more or whatever it might be, you will have a newfound belief, which will mean that you will look at things differently and try to fund your account. You'll find money from everywhere. You'll have the confidence to pitch to investors. You'll have the confidence to pitch to family members to invest their money. You'll have the stats. You'll make better decisions in your finances. Instead of buying the coffee, you'll put the money in the account. Instead of buying the new car, you'll put the money in the account. And you will treat this account like a machine that you know when you put the money in, you get a much better percentage than anything else that you put your money or energy into. So that's the reason that I say 12 months. And another great thing about that is it gives you a plan. If you're thinking further ahead, if you haven't thought about this already, you can really visualize where you'll be along the journey and plan what you need to do in order to raise capital for your account if that's something you're going to do. Believe me, if you can generate 20-25% return per year, there is no shortage of money from investors. As long as you've got the stats and the data and the projections and the best case, worst case scenarios and low volatility in your equity curve, there's not many investors that wouldn't throw money at you. So having a clear plan like this is really important for you. It gives you a clear, tangible goal, something to work on. This is why my clients do so well, is because they've got the Wealth Atlas tool, and that shows them exactly how it all fits with their investments, their passive investments, their speculation, their lifestyle costs, and how the relationship between all of those things affect the run to financial freedom. So just before we go, I want to give you another important point here, and that is when to start taking profits. Because after the 12-month period, that might not be the best time to start taking profits. What I would advise that you do is, let's just go back to our equity curve here, and let's draw this out so it looks realistic. If your equity curve looks like this, what it's wise to do is work out what the mean growth of that equity curve looks like and see how far above and below the swings are and where you are right now. So from the starting point of your account balance to today, or the 12-month period, have percentages below. So this might be 1%, 2%, 3%, and then above you might have 1%, 2%, 3%. And depending on what threshold you are below or above, you can consider whether or not that's the right time to take an income. And let me give you an example to what I mean. This is a great way of seeing how above or below your average performance you are. And then again, you can have percentage thresholds below your average performance to dictate how much income you take. If you're way below, if you're like at the brink of your maximum allowable drawdown of 5%, 6%, 10%, if you're right at the bottom of that threshold, you can then go in and go, right, I'm going to start taking profits. Or you might just take profits when you go into profit. So look, that bit is the bit that's going to be down to you. I just thought I'd share some insights on that. But other than that, the rest of this is pretty solid. You can take this, apply it. I hope it's been helpful to you. And just on one last piece of advice, and that is, if you don't think that this is meaningful to you and you don't want to do this and it isn't worth it to you, the last question is, can you get 20% or 25% doing something else? Can you invest your time, energy, and money into doing something that you are intrinsically motivated to do and generate more than 20 to 25%? If you ask yourself that question, you might find that trading just isn't for you. And my advice would be to put your energy and money into something that you are motivated by, that you need no motivation to go and do. Because trading is hard, it's a skill, it's going to take you 12 to 18 months to even start to see a profit. And I can already hear the people in the comments going, yeah, well, I've done it, I'm doing it, or I started with this, I started with that. I'm not a believer that you need money to make money, but unfortunately with trading, you have to trade money. There's no other way of utilizing any leverage of staff or people or rental or property. You have to trade money. So therefore you need money to make money in trading. And by having a clear plan like this will ensure that you're more geared up and more prepared to access that capital and manifest these results into your trading. So I hope this has been useful for you. Let me know what you thought in the comments and don't forget to share this around. Until next time, take care and I'll see you then.